Welcome guys to another episode on the smart money concepts trading model. Okay, this is Melody FS Academy, and if this is your first time of coming across this channel, please do well to subscribe to this channel, turn on the notification bell to get notified when we upload our weekly content. Okay, so in today's episode on the smart money concepts trading model, I'm going to be looking at the quarterly market shift. Okay, so actually someone made a request for this tutorial some time ago, okay, when we started out, and I kept it aside for this model, for this smart money concepts trading model. Okay, so I will not be able to actually cover the whole concept of the on the quarterly market shift. Okay, we're not going to be able to cover it in one video, so definitely I'm going to break it into several parts. Okay, but we are going to do a bit introduction on it, and let's see how it goes. Okay, so let's get down to today's business. Now we are going to be looking at quarterly market shift, as we can see. Okay, so what is the quarterly market shift? Okay, now the interbank price delivery algorithm, which is otherwise still known as the IPDA, okay, the data ranges. Okay, so now the interbank price delivery algorithm has a data range, okay, that it works within, and by understanding what those ranges are, we can go into the marketplace with a predetermined idea where the algorithm will do its work. Okay, so now where is it the algorithm is pulling information from? Okay, what dates, what ranges, and what specific highs and low is the algorithm wishing to as a reference point? Okay, so now understanding the price delivery of the interbank price of the interbank price delivery algorithm, this will help us to know specific data ranges, okay, specific dates, specific ranges, specific highs and lows that the algorithm is going to be reaching for as a reference point. Okay, so now that is where the ideas of quarterly market shift comes into play, because the market is believed to be manipulated. Okay, and during our time as smart money traders, okay, be it a newbie or someone that has been following up ICT for a while now, you definitely know that the market is being manipulated. Okay, so now I'm going to be looking at the 3 to 4 months major market shifts. Okay, so there is a major market structure shifts that take place every 3 to 4 months. Okay, this does not apply to only the foreign exchange markets, but to all other asset class. Okay, so knowing fully well that the market run on algorithms, they are highly manipulative. There is a tendency that the market repeats different kind of structures. Okay, the phenomenon is that same market conditions tends to repeat itself in the nearby future. Okay, so this alone gives way to the major market shifts that happens, or rather the quarterly market shifts that happens on every 3 to 4 months. Okay, so that is going to be the focus of these teachings. Okay, we're going to look at the quarterly market shift that happens on every 3 to 4 months, and not only on the foreign exchange market. Okay, it happens in all asset classes. Okay, so now let's go further. So now this effect takes place because the market has to generate new interest. Okay, so why does the market shift quarterly on every 3 to 4 months? Okay, this is because the market has to generate new interest. Okay, it has to have a new sense of urgency. Okay, so now what was seen as a directional movement in the marketplace over the last 2 to 3 months may not in fact be true, okay, for the next coming 2 to 3 months in market directions. Okay, so now every 3 to 4 months there is going to be a change in direction. Okay, it may cause a consolidation, a retracement, or whatever price swing that has been unfolding up to that moment. Okay, so this lecture is going to be uh, both of theory and a little bit of practical. Okay, so stick to the end, don't skip any part of the video, okay, because these are very very vital uh, information and part of the lesson. Okay, to gain a full understanding you have to stick around, don't make sure you don't skip any part of the video. Okay, so now let's continue. There's always some intermediate term play to trade on every 3 to 4 months. In other words, there's always new trading opportunities that's going to form in the marketplace on every 3 to 4 months on every asset class. Okay, so this is not limited to forex alone. Okay, it's also it's also found in the futures market, the bonds markets, the crypto markets, and all other asset class. Okay, so now let's go down further. Now, how do we look at the quarterly? How do we identify the quarterly market shift in price? How do we identify it in price action? Okay, so now we to be able to identify the quarterly shift. Okay, to be able to identify it in price action, all you have to do is pull up your chart. Okay, you pull up your chart, and obviously this is how you are going to backtest it. Okay, this is how you are going to backtest it. So you go to the monthly time frame. Okay, start from the monthly time frame. Now obviously what we are seeing here is a year data. Okay, a year worth of price action data on the Aussie dollar. Okay, so this is January 1st of the previous year, which is 2021, to January 3rd of the current year we are, which is this is a 1 year time window. Okay, this is a 1 year time window, and this is how you are going to backtest this. Okay, so pull up your chart and on any asset class and put a vertical line, okay, to delineate from January to January of this current year that we are. Okay, so this is obviously last year price action on the monthly time frame. Okay, so now once you have this on your chart, we are going to be looking at the market on a quarterly shift of 3 to 4 months. Okay, we'll look at it on a quarterly shift of 3 months and on a quarterly shift of 4 months. Okay, interval. Okay, so now let's go down. Now this right here is on a quarterly shift of, this is a 3 month quarterly shift. So now how do you place your vertical lines? Okay, so now starting from the first month of the year, which was last year, obviously January, that would be the first month of the year is January, right? So as you can see, we have the time right here, January, right? So you count the first 3 months. So we have the first month, January, February, March. Okay, so now that we know, remember we are looking at it from, this is us using the 3 month quarterly sheet. Okay, so obviously the first 3 months in the year 2021 saw a kind of consolidating market, right, on the Aussie dollar. So now we know that in the following month, which is going to be the month of March, April, sorry, January, February, March. So this is going to be April. So we should expect a quarterly shift. Okay, we should expect a change in the quarterly shift. In other words, there's going to be a sort of change in the trend. Okay, so January, February, March obviously saw a kind of consolidation. Okay, so now come April, okay, we are now anticipating a shift in market structure, a shift in the trend, right? So now as you can see, April, May, June, which is then the next, which is when we anticipate next quarterly shift. Okay, so as you can see, on the month of, starting from the month of April, we had a little bit retracement, kind of stop run. Okay, we had a stop run above this previous month, right? Then the market shifted in structure bearishly. Okay, the market shifted in structure bearishly. So we had our first shift in our first quarterly shift of the year, right, in April, which is the second. So we had our first quarterly shift, right, from the month of April. And so now we had 1 2 3, right, April, May, June. So on the month of May we are expecting another shift, okay, another possible market structure shift, right. So May, June, July, you can see traded continued, okay, the trend from April, May, June continued on May, June, July, okay. So obviously we went into some entering into July, August, okay, entering into August, we can you can see we had a little bit short term retracement, okay, we had a little bit short term retracement. So we were anticipating another, knowing fully well that on every 3 months there's going to be some sort of market structure, okay. So when we had this first consolidation, we knew that going into April is going to see some kind of market structure shift, okay. We are going to see some kind of change in the trend, in the underlying trend, okay. So we moved between January, February, March consolidation. We had a little bit force run to the upside to induce in liquidity, right, to induce in liquidity. So April, May, June, sorry, January, February, March, April, May, June, right. So saw a kind of run on liquidity and a kind of retracement which expanded June, July, August, okay. So it expanded into August, right. August, October, November, December, oh sorry, January, February, March, okay, April, May saw a reversal, right. June, July, August, September, October. So October, November into December saw a kind of October saw a kind of retracement. Then November saw a kind of short-term expansion and consolidation in December into the new year. Okay, so as you can see on the 3 month time window, we saw different market shifts, okay. We saw different quarterly shifts in the marketplace, okay. So now let's look at this same price action data on a weekly time frame, okay. So this is the 3 month quarterly shift, okay. So now as you can see the 3 months quarterly shift gives us context of where the market structure is and what shift should take place next, okay. Obviously we saw that we are consolidating, okay. So the first 3 months gave us showed to us that the market was consolidating. So the next phase we expected was like a breakout, a first breakout, an expansion, right, consolidation, expansion, reversal, okay, then another expansion to the downside, okay. So we had a consolidation, expansion, okay, we had an expansion, a reversal, and another expansion as a continuation as another shift in structure, right, to the downside, okay. So this obviously showed to us the current trend and what to expect next, okay. So obviously you can see we had a consolidation, right, we had a first move as endorsement of liquidity, right, then we had an expansion, and the next phase is probably retracement, right. As you can see we had the retracement, a little bit of an expansion, then consolidation into the following new year, right. So now this would be how to identify the market quarterly shifts on a 4 month quarterly shift, okay. So now using the same procedures, you start from your January, okay. So we have January, February, March, April, okay. So now this is the first 4 months of the year, right. So now from May we are anticipating a shift in structure, okay. Obviously you can see January, February, March, April consolidated, right. Then we had May create a kind of force move to the upside, April, May, June, July, August, which is another 4 months, right. Another 4 months saw an expansion to the downside, right. So April, May, June, July, August, September, November, December, I should say some kind of change, some kind of shift, okay. So obviously we had an expansion to the downside, a little bit of retracement, and another expansion. Then we went into consolidation into the close of the year, okay. So as you can see, the 4 month quarterly shift gives us the context we had, and the context was that we had during the first 4 months of the year we had price consolidating, right? Price was in an equilibrium. Okay, price was in an equilibrium state, right? So we consolidated, then we saw a force move, a run on liquidity, then we saw an expansion, a retracement, an expansion, then consolidation into the new year, which is the current year we are right now. Okay, so now let's go down, and this is looking at this from the 4 months. Okay, this is the 4 month quarterly shift, right? So looking at it from the weekly time frame, okay, you can see obviously the first 4 months of the year of the year 2021 consolidated, right? Then going into the next the second quarterly shift, okay, we had an expansion, which is a bearish move to the downside. Then going into the final shift of the year, we had a retracement, a little short-term retracement, which went above an order to take out liquidity and went down, and expanded and created a kind of retracement into a consolidation into the new year. Now, how do you I want to point something to us, right? I want to point something to us right now. Okay, so sorry about that. I want to point something out to us. Okay, so now I want you to notice where we use the 1 2 3 4, right? Sorry, 1 2 3. Okay, then we add another 1 2 3, then we add another 1 2 3. That will be 1 2 3 4. Okay, so in other words, if you are using the concept of you are using the 3 market the 3 month quarterly shift, you should expect a shift in you should expect a shift in market structure 4 times in that trading year. Okay, so if you are going with the one of 3 months, okay, so you are using the one of 3 months, okay, expecting a quarterly shift every 3 months. You should expect in a trading year, you should expect the market to shift in structure quarterly 4 times in that trading year. Okay, so as you can see here, we had 1 2 3. Okay, and the market shifted in structure again. So the market was consolidating, then shifted the structure, then shifted the structure again, and shifted the structure again. So it happened 4 times in the year 2021. Okay, so the market shifted structure 4 times when while when we are using the 3 months quarterly shift. Okay, so now let's look at the one of the 4 month quarterly shift. Okay, as you can see, when we used the one of the 4 month quarterly shift, you can see the market only shifted in structure 3 times in the year. Okay, so it's vice versa, right? So if you are making use of the 4 months, you should expect quarterly shift 4 times. Sorry, if you are using making use of the 3 month quarterly shift, you should expect a shift in structure 4 times in that particular trading year, in a year. Okay, if you are making use of the 4, you should expect a quarterly shift 3 times in that trading year. Okay, in that particular trading year. Okay, so now this is it from the daily time frame. Okay, so using the 4 month quarterly shifts. Okay, so you can see the first year consolidated, then the second shift that happened created a huge kind of, we had a trading 4 months. Okay, trading 4 months worth of price actions. Okay, then entering the final shift, you can see we had a short-term retracement and another continuation to the downside, then entering into the new year. Okay, so that is what I wanted to draw to our attention. Okay, so now looking at we are going to be looking at the concept of the look back. Okay, we are going to be looking at the look back. So now, what is the look back? The look back is simply looking back at the previous 60 40 20 trading days. Okay, 60 40 20 trading days. So now, how to do the look back? How do we do the look back? Now, from your month of study, be it January, March, May, or any of the month, okay, etc., look for the most recent past month. Okay, you are going to be using that first trade. So you're going to be look for the most recent past month. Okay, We are going to be using that first trading day of that month. Okay, put a vertical line on it, and from that point you are going to be looking backwards from the left side of your chart, okay, of that vertical line you placed on your chart. Okay, so you are going to be looking for the last 60 trading days, the last 40 trading days, and the last 20 trading days. Okay, so now why are we looking at these specific data ranges? Okay, this is because the algorithm will reach back about 3 trading months worth of data. Okay, that's the average it is going to reach for, and there are other times it is going to reach for further ranges. Okay, so now the 60, 40, and 20 trading days left of the most, okay, to the left of the most recent calendar month, put your vertical line on that. That is your beginning marking point, and you are going to delineate the 60, 40, 20 trading days, not calendar days. Okay, so in other words, the trading days we are looking at does not include weekends. Okay, we are only looking at trading days, not calendar days. In other words, we are not considering Saturday and Sunday. Okay, so we are only looking at between Monday to Friday, every trading days, excluding public holidays. Okay, we are excluding public holidays from it, so we are only looking at trading days. Okay, so now I have a graphic illustration here to show us how to cast our look back. Okay, how to do the look back. So now, if we are anticipating, let's say currently we are in the month of June, right? We are in the month of June as at the time of watching this video. Sorry, at the time of making this video, we are in the month of June. Okay, so this is how you're going to do it. So some of us are going to watch the video in maybe, let's say, December, sometime in the future, right? So some years later, maybe you come across this video, and whatever trading month you are in, okay, whatever trading month you are in, be it May, be it January, be it February, this is how you are going to do it. Okay, so now currently at the time of making this video, we are in the month of June 2022. Okay, so now how do you do your look back? To do the look back, simply go to the most recent trading month. Okay, so what is the most recent trading month that has just closed from June? Okay, in other words, what is the trading month before the month of June? Okay, the trading month that just closed before the month of June is May. Okay, so we have May, June, right? May, June. So if we are in July, we would have make use of June. Okay, so if we are in September, we make use of July. Okay, so that is your most recent trading month. Okay, so what you're going to do, you go to the 1st of May. Currently we are in June. Okay, so you go to the 1st of May and you place your delineation on the first trading day of the month of May. Okay, then you're going to look back. You're going to look back 60 trading days to the left of it. Okay, you're going to look back 16 trading days to the left of the month of May, 14 trading days to the left of the month of May, 20 trading days to the left of the month of May. Okay, so that is how you do, that's how you cast your look back. That's how you do your look back. Okay, so it doesn't matter the month you are. You can be in the month of December. If, let's say we are currently the month of December, okay, so we'll be looking at the month of November. Okay, so we'll be looking at the month of November, we'll be looking at the first trading day, and we'll cast it backwards. Okay, so that is how you do your look back. Okay, so and that is how you anticipate your quarterly shift. Okay, so now let's go down further and look at how this looks in price action. Okay, so this is the Aussie dollar, right? And currently we are in the month of June, right here, over here. Okay, so now you have to go back to the most recent month. That's the month that just closed prior to that your current month. Okay, in other words, we are in June, and the most recent month, trading month, is May. Okay, so after May we have June, right? So we'll go back to the 1st of May. Okay, obviously the day that started May was on the 2nd. Okay, so this is the first trading day in the month of May. Okay, so you put your vertical line on it. Okay, then you take your trend line. On trading view, you can turn on the option to measure this using the trend line. Okay, there's a way you turn on the option, like once you click on that, once you click on your trend line, the window bars that pops up right here, you click on that setting bar. Okay, you click on that setting bar, I think you go to style. Once you go to style, on one of the menus that's going to pop up once you click on that little I tried adding the screenshots, but I don't know. But once you click, anytime you click on your trade line, you know there's always a little window bar that pops up, right? So you click on that little setting icons. Once you click on it and you look for, you're going to have style, text, visibility, and some other option. Okay, so you click on style. Once you click on style, you go back and you look for the option that says date and time, date/time. Okay, so you toggle that on, you click it on. Once you turn it on, and that's all, you click apply. Okay, you click apply or okay. Then once you begin to draw your thread line from to the left side of this vertical line, your thread line is going to be displayed the number of days you have gone back. Okay, the number of days you have counted backwards. Okay, so that's how you do it. So once you place your thread line on this vertical line, you draw it backwards. So you're gonna see the thread line is going to be displaying the number of days, how far you have gone. So this is obviously my 20 days IPTA range. Okay, so now we have my 40 days IPTA range and my 60 days IPTA range. Okay, so this is how you do your cast back, this is how you do your look back. Now obviously we can't cover this in one video like I mentioned earlier. So in the next series we are going to talk about the importance of the importance of the look back. How do we make use of the look back in trading? How does it aid us in trading, and how does the quarterly shift aid us in our trading as well? Okay, so now the takeaway from this lesson is that currently we are in the month of June, right? So if we are to say this, if this is, let's assume this is 2022. Okay, this is 2022 calendar trading year, right? So we'll definitely be somewhere around January, February, March, April, May, June. Okay, so we'll currently be around on this particular candle. Okay, so I'm just making an example, right, that this is the month of, that this is the year 2022. Okay, so and we are currently, this is the monthly time frame, remember, and we are currently on this trading week, on this trading month, right? So now we would have seen our using, if we are to use the 3-month quarterly shift. Okay, we have to use the 3-month quarterly shift, so that will look like January, February, March. Okay, so this would have, so from April we would have seen a different our second shift, or rather our first shift in market structure. Okay, our first quarterly shift. Okay, so now using the 4 months, as you can see the example right here is using the 4 months, right? 1 2 1 2 3, no sorry, this is the 3 month. Okay, so we had the 1 2 3, then April sees the first quarterly shift. Okay, so this in other words, once we have April approaching and we look at the last 3 months, okay, and we saw that the movement was consolidation. Okay, so definitely the coming of April we will be expecting a change in the underlying previous trend. Okay, a change in the underlying market direction. Okay, so if the first trading if the first 3 trading months of this year we are consolidating, the month of April should see some kind of change, maybe an expansion, definitely an expansion or a retracement, depending on the previous price action we have. Okay, so definitely what I'm trying to say in essence is that this year has already seen the first quarterly shift in structure. Okay, this year has probably seen the first quarterly shift in structure. Okay, so we should anticipate, if we are using the 3 months, like we can see our given example right now. Okay, we have January, February, March. Okay, April have seen the first quarterly shift, right? April, May, June. So our next quarterly shift is going to come up in the month of July, right, which is probably next month, using the 3-month quarterly shift, right? So our next quarterly shift in this current trading year that we are is going to happen next month. Okay, so probably you should backtest it and look at the first shift that happened. Okay, so that's an assignment. I want every one of us to go into our chart and look at the first shift that we had. So backtest and look at the first quarterly shift we have on this particular asset class this year. Okay, and other asset class as well. Okay, not just the Australian dollar. Backtest it and also look at the past previous years past price action, past years, okay, backtest it on the monthly time frame, okay. um, so that brings us to the end of this teachings, okay. So if this is your first time of coming across this channel, if this is your first video you have ever watched on this channel, please do well to check out our previous videos, okay. And always remember, we have our Telegram group link attached to the description box, so you are free to join our Telegram, okay. That's where we answer most questions, and you can reach me easily, okay, via the Telegram group, okay. So I do hope you have found this video insightful. Please, if you have not subscribed to this channel, please do well to subscribe, okay. Turn on the notification bell to get notified once we upload our weekly content, and I will see you guys in the next episode, okay. So do have a great weekend.